Josh Appleman, founder and CEO of Appleman Properties. Today, we're joined with Lee Fjord. Lee is a successful real estate investor, scaled a property venture to 700 plus doors through Green Forest Capital. He focuses on value add opportunities and posing on Zig Ziglar's ethos of mutual success. Lee, we're excited to have you here today. If you could let the audience know a little bit more about yourself.
Absolutely, Josh. I really appreciate you having me on, and I'm looking forward to bringing some great value to the show and your audience as a whole. I'm a pretty basic guy. I'm a real estate guy. I started out as a manager, then I graduated to a broker, was with a company called Marcus and Millichap. You've probably heard of them for quite a while, and then now transitioned over to being an owner. So I focus on the deal flow, acquisitions, and asset management side of our business here in multifamily, and really excited about what's to come in the future.
Perfect. Good deal. I love the experience. I love the journey you've taken to get to where you're at now, because it really encompasses all avenues of what it takes to be a successful real estate investor. Even on the property management side, can you touch on that a little bit for us?
Oh my gosh, it is a thankless job. I love the third-party management companies that I work with because it is a low margin, human capital centric industry that usually very rarely do they get praise. And if they do get contacted, or when they do get contacted by the ownership team or the tenants, it is usually a negative situation, unfortunately. Yeah. So I love that. I love the companies that I work with. I work with a few third-party management companies. No longer do self-manage a couple, but I'm really getting away from those or selling them as fast as I possibly can. The smaller properties that we do self-manage still. But yeah, basically started in 2012, thinking I was going to sell houses, and I ended up in the management side of the business instead. And learned the hard way what I don't want to do.
Yeah. Well, and I think you hit it spot on. It's the smaller properties that ultimately requires you to manage your own, or manage your own with a team. Because once you third party out, let's just call it 50 units or under. If you third party out 50 units and under, the properties, I think, suffer because your expenses are higher, and those companies also have to spend more money on vendors going out and not having on-site management. So things are just more inflated. And the way to do away with that inflation is self-manage with your team, and to keep that cost down is to have more units to offset the cost. I feel the pain, though. I totally feel the pain. We're in the trenches, and but to get over that is to buy bigger properties, bigger units where you have on-site management. Is that where you're at right now?
That's exactly where we're at right now. So we are at a place where have about 25 units that we self-manage, and the remainder of the 700 unit portfolio is all third party. And that's why we only are buying 100 plus unit apartment complexes any longer. The ability to take advantage of scale, the ability to hire a flat rate property management company that doesn't have to make their profit off of upcharging for maintenance payroll, where they'll charge you $50 an hour, but they'll pay the guy $25. That's how they really make the majority of their money, is in that that side of the business, is how smaller mom and pop management companies earn the largest portion of their profit margin. Is literally that, is maintenance inflation. And by bringing in a management company that charges a flat rate, let's call it 3.5%, 4%, it allows us to be able to have they know how much they're going to make based upon what we bring in, and us to be able to hire the best people. And it's not going to prevent us from doing anything. Plus, as far as like payroll and hiring, I prefer to overhire and over incentivize our management and maintenance staff. We probably pay them better than anybody else that I know of in the industry. And I would much prefer that, overpay them and have them take home more, than overpay the management company and have them take home less.
Yeah, but if your vision for the company is a 5-star hotel like multifamily complex, you start with the maintenance teams, because they're going to make sure that perception of the landscaping being on point, the paint not chipping, just everything that you would expect, they make sure that they're taking care of it, and they're getting paid appropriately to make sure to have your back. That's I like that you said that. That's huge. And they're happier, so they're inclined to do more when they're paid accordingly.
Oh, okay. And even down to the uniforms, we have our maintenance staff wearing logoed uniforms, flame retardant uniforms that are washed for them. And they show up and they are wearing a logoed uniform, and we know they're going to look, clean and orderly when they go to that tenant's apartment to do that maintenance item. And they're not going to show up wearing a Grateful Dead t-shirt,
Not saying that would happen, right?
They can wear whatever they want in their own time at home, but
I'm with you.
wear that on site at our property.
So is that branding? Is that branding like per property? So if you have a property called, XYZ, would it be the maintenance staff wear the branding for that particular property?
So it's the property management company in most cases, but we are going into a direction where we're going to be having it's so easy to have patches created, to stitch, and we are going to be incorporating the patches and the logoed shirts for the maintenance staff and the manager to even be able to wear during the day as well.
I like that. That's huge. That just gives another level of you're supposed to be there. Now I know who you are because your name's on your shirt, and here's the company you represent. That's adds another level of security and comfort for the residents. That's huge.
Yeah. It also, one last thing is it allows us to be able to go out and make decisions that a separate management company wouldn't do. Like, for example, we just purchased 50,000 square feet of flooring all at once. We bought it directly from the wholesaler. We bought it for 50, including delivery, 57 cents a square foot for our flooring to be delivered and installed. And we can do that with a larger property.
Yeah.
And when the management company isn't worried about also upcharging it. Too many times, if you hire the difference between a grape and a slice of a watermelon is that the grape is managed by a mom and pop management company. And every time they go to Home Depot and buy a faucet, they have to increase that cost by 10% every time across the board. And we don't do that.
Yeah, no, that's another way that we're able to help boost our returns as well, is through volume purchasing and national pricing that's been pre-negotiated with our vendors for supplies, and it adds up so quick. I mean, you just put your six cap on anything you save through the course of the year, and it gets to be fun. It gets to be very, very rewarding. For sure. So how did you get to 700 doors? That is substantial. I love this. It's because you started out where everyone starts out at, and then you scale to 700 doors. If you could take us through the journey.
So I bought my first duplex in 2017 and did it all the wrong way. And I try to pride myself on helping people avoid what I chose to do, which was, I thought I was going to be the biggest small multifamily owner ever. I did 4 families and duplexes and single family houses. And my goal is to help other people avoid that. I realized that it took a team, and that if I found the highest level partners available to me and partnered with them, I could drastically increase the velocity of the size and the types of deals that I was doing. So I set my sights on finding, and I still set my sights on finding the best potential partners in the industry. And when I work with a partner, they are, I don't look for people that I'm like training up from the ground up. I'm looking for people that already, have drive and skill and experience in as many areas, or the area where they're going to be adding value. So that's really helped. And essentially learning from being in the trenches as a broker, being able to learn from the best how to underwrite, how to be able to convey confidence and capability to close. And then just systems and processes, and having tools to be able to maintain that relationship with the brokers, run, underwriting very efficiently, making lots of offers. I think right now we're in between projects today, but last week was a pretty good week. I think we submitted 7 offers last week. So it's just a game of numbers, and just pushing as many deals through the pipeline as possible.
Are you seeing seller expectations softening, or what's your experience?
They're starting to. I would say that sellers who the only sellers that are softening, which some are one of two. They either see future opportunity coming in the next 12 to 18 months or 24 months, and they want to have a greater amount of liquidity, and they're willing to take what they can get today in order to be able to deploy that money in the near future, 12, 18 months from now. They have a great property. They think the timing is right for them to exit, and they're exiting and they're happy. They probably would have sold for more a year ago, but they know that and they're okay with that. And then the other sellers are sellers that are forced to sell at this point. People that are coming up on rate cap expirations, or coming up on debt expirations altogether, or I've seen instances where the property has been taken back by the pref equity provider. They've taken over and forced because of the inability for the manager, the partners, the active ownership team, the inability for them to exercise the business plan properly. Basically, there's usually some sort of a clause in that pref equity agreement that allows them to claw or take over the control of the property if you don't maintain a certain level of occupancy and collections. And there are some operators that probably shouldn't have been in the industry, that took their eye off the ball, or just thought the management company was just going to do a great job because they are a big management company, but that's not really how it works.
Yeah, I think the management companies are more or less they're there to set employees in place, and of course they bring the expertise to make sure that they're hiring for the right people. But they're an employee firm, that labor firm. But the operator syndicators that we're going to see, I think a lot of them, or some of them, didn't have any kind of business acumen or didn't have a business before, and you've got to be able to pivot. You have to have a sense of urgency and be able to apply pressure where pressure is needed to get these properties to perform, especially on a value add where you've got components and forces at work to where you need to be able to apply the right things to make it happen.
Have to constantly tracking and measuring the important things for each individual property's business plan, whether it's how many utility bills are being transferred into the tenant's names, how quickly, how often, and when, or renewal rates, or vacancy, or collections, or all of those things. And each time we take over a new asset, we constantly are modifying our KPI tracker on a per property basis based upon what is happening at that property.
Yeah, it's and once you take your eye off the ball, I mean, it's like grass. You have to constantly keep the grass mowed to keep it looking good. I mean, once you stop 1 week, then it just compounds, and you can't. Depending on the asset class, of course, your C, Bs, and As. I mean, you've got to handle some with an iron fist and make sure that they're managed very tightly. Others can, they're most self-managed with the right people, but those aren't for sale out there on the market, I don't think.
No, it really comes down to the staff a lot of the times on site. I've in instances had to replace managers or maintenance staff on site because they weren't performing to our requirements. So that's just a conversation with the management company, like you described. They're there to hire, train, hold accountable, generally the staff. But we have weekly meetings for every single asset that I own and asset manage. So that's how we, and then continually throughout the week, have conversations and communication with our on-site team and even the back of the house team, like the accounting department as well.
Yeah, I think, and with any business, everyone needs to know what the mission is, where we're heading, and then they need to know what they're accountable for, and then give them metrics and reasons why, and then give them praise when praise is due, for sure. Everyone wants to know how they're doing. It's and the better they feel like what they're doing and it's on track, the better the property runs or the business runs. So for sure. So what kind of rooms did you join to get to where you're at? Did you get into mentorship rooms, groups? How did you tell us a little for the listeners? Because everyone, it's always hard to connect the dots when you're wanting to get into real estate investing, because it's hard to get the information and where you're going to get it, whether it's on YouTube, podcast, but there's also other ways to joining mentorship programs or groups, and you can help accelerate your path. Can you talk a little bit on that, Lee?
I'm a member of 3 different groups specifically centered around multifamily real estate investing education. And I joined the very first one back when I bought my first duplex, and it was great. I ended up, having a great experience with the coach that I hired to help me through that process. And I owe it, essentially to that group and that coach for allowing me to understand what the process was like to take the business to a different level. I would probably own 30 duplexes now,
Yeah.
or more, maybe more, but probably not 700 units. And, but I would be running around town still in my van filled with tools, fixing things myself, because I just, couldn't wrap my head around hiring somebody and paying $50 an hour to have somebody install a vanity. So long story short.
Makes sense at the time, though.
Yeah, it did at the time. And I
Yeah.
built a decent amount of equity in those properties doing that back then. And it can be done. And I know millionaires that drive around town in a rusty pickup truck, with a weed whacker in the back, that own, 200 units with no partners.
Yeah.
And they're millionaires. But you better believe freedom is nowhere in their job description at all. Like location freedom, time freedom, everything is an emergency. So, that makes it very difficult.
Well, and I think that they wake up with their purpose in mind is to go and cut the grass, trim the bushes, fix leaks. That's their purpose. And I don't think that they're even looking for the ultimate freedom of time and location. And it's a different mentality, I think, on a lot of these cases, because those owners will eventually sell, no matter what age they are, eventually. And you want to be the one that creates that relationship. But they've, and I know, and the reason I'm bringing this, I know exactly what you're talking about. We bought a property from someone who he was original owner, and that's all that was his baby. And you want to make sure it was passed on to the right group. But it's different purposes for everyone too. That's what's cool about the industry. They build equity and they really don't even care about it. That's just what they do.
Yeah. And they're more worried about the grass or the
Yeah.
weeds or the running toilet than they are about, the bigger picture, utility bills, who's paying them and how, the business plan, the top line items, because you're more worried about what's happening in the trenches.
Yeah, 100%. So you're joined with 3 different groups, and getting in a room is I think the biggest thing in this industry. And ultimately, what I love about real estate is every real estate entrepreneur loves leveling themselves up, constantly consuming content to get to just education. But getting in the right rooms, where would you suggest somebody who's listening right now or listening in the future to start their journey to gain the knowledge?
If they're just getting started right now, they're doing the right thing by listening to your podcast. First of all, education can be free, and getting that as much free education in the very beginning is vital, because you're going to want to pick your path first, then pick your networking group, pick your asset class and first, because if you're thinking you want to own storage units, it doesn't make much sense to join a multifamily real estate investing networking group. Or if you want to own, retail or, mobile home parks or whatever, that you pick your flavor of ice cream first, whether it's, even if it's, flipping houses, whatever. If you want to be the best house flipper, don't join a multifamily group, because that's not going to be very helpful for you. So it's really just pick your direction and then find the group that you resonate with the most, who is, fits your, available budget. There are free groups, and then there are paid groups, and there are paid groups that are $5,000, and there are paid groups that are $50,000 per year. And I can tell you that in all cases, if you go into that without the plan and the action or the action plan of deciding that I'm going to make this worth it, I'm going to put, myself out there and I'm going to get as much out of this $5,000, or 50 grand as humanly possible. If you don't go in that with that, it's a bad investment.
Yeah.
You are the one who determines whether or not you're going to get the value out of it, not them. You can sign up for an education group and then never show up to any of the, the events or, or do any of the courses. They can't force you to do it. That's where so many people fail, is they join one of these groups and they think, oh, these people are just going to grab my hand and drag me through it. That's not what you did. You signed up for an education. You imagine going to college and then never going to class.
Yeah.
That's
a good analogy.
Hanging out in the dorms, waiting for somebody to tell me what time I need to go to class and where and all that. It's no, it just doesn't happen that way. You got to show up, go find yourself a guidance counselor and be like, what classes should I, go to? And they're going to be like, oh, you want to be a doctor? Cool. Go take biology, whatever.
Yeah. And I think that the people they want you to be engaged. They don't want to do it for you. You have to have a drive and ambition for yourself. And I think people will see that, and then naturally they'll want to help you out and make sure that you're successful. But if you're showing up just to show up and someone else to do it, I totally agree with you 100%. Put in the effort. It's all of it is it's all knowledge that you can use for the rest of your life. The more you learn, the more you can apply. And it's incredible how you can vertically use this knowledge on different companies and just just analyzing different deals. It's very cool. What's the future look like for you, Lee?
So this year we have an objective of closing a total of 4 deals. We've already closed one in Fayetteville, Arkansas, Northwest Arkansas, which I love that market. It's a great area. And we have an objective to close 3 additional deals, a total of 4, to take us from 50 million assets under management to just over 80. So we want to get to 80 million assets under management this year. And then the objective in the following year is to close an additional 80 million to go to 160.
Nice.
So yeah, the goal is to get to 160 million assets under management by the end of the year 2025.
Is with Green Forest Capital, are you the sponsor of Green Forest Capital, or is it a combination of other members in the GP?
So I'm the sponsor, and then I have partners that I work with that bring different value to the team, depending on the deal size and the deal type. So if it's a much larger deal, let's say a deal that's 25 million, then I know who I'm going to bring in to help me with the debt signing. I know who's going to help me with the capital raise. I know who's going to come in and help with the the capex, depending on how much is needed at the particular property. It's a team effort.
Yeah.
Everyone has their role to play, and everybody gets, to have an opportunity to add value in their own way.
Very cool. And that's what's fun about the larger properties, is bringing in the high talent, and everyone partakes, and it's funner with when you can join other people to get there for the celebrations along the way. Very cool. If somebody wants to reach out to you, Lee, how can they get in touch with you?
Yeah, they can find me at greenforestcapital.com. There's a contact me button on there, or a tab where you can go in and schedule a 15-minute intro call to learn about how you can work with me and my team on a larger scale multifamily acquisition. And I'd love to get to know anybody in the audience, regardless of their position. And I'm making an objective to be able to have a pre-existing relationship with all of my investors when and ever possible. So we have a 3 phone call that lasts about 15 to 30 minutes each, process that we go through in order to be able to formally establish that substantial relationship. So it's a quick, hey, get to know you, then they get to know me, and then I get to know them on a more deep level on that 3rd and final call.
Very cool. I like that. That way, like, and trust who you're going with. Make sure that you're a match, your personalities or everything. Everybody understands the deal, size, scope. Cool. Lee, definitely appreciate your time today. Very enlightening. Definitely looking forward to following your journey, and Look forward to talking to you.
Yeah. Thanks, Josh.
All right. Thanks, Lee.